Guys, this is insane. Zillow just confirmed one of the biggest housing crashes. Those who are subscribed to me know that I have been relentlessly looking through data. And to be honest, this article I'm about to show you guys isn't too shocking because I've seen it coming from a mile away. Housing affordability hits 15-year low as prices, mortgage rates rise. Mortgage payments are higher than rent in 45 of the 50 largest US metros, up from 22 in 2019. Now guys, on this whole rent versus buy situation, they clearly said that rent is cheaper in 45 of the 50 metros. And I've been saying it's way better to rent for the past 3 months. So this confirms it even more. And it also just shows you how high mortgage rates have gotten up, because mortgage rates, mortgages, they have surpassed the monthly rent costs. Price appreciation is finally starting to slow, easing slightly from 20.9% annual growth in April to 20.7% in May. Now guys, as we can see, price appreciation has decreased ever so slightly. My verdict on this is because of the buyers are not as on the market as they once were because of the rising mortgage rates. And they see all these houses and they're like, you know what? I'm gonna just wait out the market because these 6% interest rates are just not it for me. So I'd rather just sit out the market and wait and see what it's going to do. And by them doing this has added more inventory into the market because homes are staying on the market for a longer period of times. And these sellers are seeing this and like, hold on, let me throw in some more price, because because the market has to adapt. It has to reach a certain equilibrium. So prices are kind of they're kind of going, this is going to sound like a weird analogy, but I think they're going to the side. I foresee a housing correction, and then I foresee an inevitable housing crash, because the price cuts are only going to get bigger and bigger. And the Federal Reserve is doing pretty aggressive on the rate hikes. Mortgage rates shot up in early June, averaging 5.78% as of Thursday. The purchase of a typical U.S. home at that rate would mean monthly mortgage payments of $2,127. That's 51% higher than a year ago and up 36% year to date. Now guys, these mortgage payments could potentially get even higher. The Federal Reserve has 4 more meetings. One of those is currently in this month on July 27th and the July 28th. And the last time the Fed met up, they did a triple rate hike, which it boosted interest rates significantly. And also this article elaborates on something more interesting. According to the Home Ownership Affordability Monitor, we have the lowest affordability in a it goes back to 2007, but our affordability is even lower. Like, our affordability is at its lowest it's probably ever been. And this is really bad because it puts people in a cost burden, and not too many people are buying homes right now. So that's what the Fed is trying to do. They want this to happen so they can enclose on the housing market and have a housing crash. Now, you guys know in my video, I always talk about inflation. Why? Because inflation is a big part of what's going on today. Now, we are currently at 8.6% in terms of inflation, which is should be even higher. We don't know, it's just an estimate. And wages haven't even caught up to this inflation crisis. So each and every day, people are working at a net loss on what they should have been working for, like previously before this inflationary issue. Inflation and accompanying with the low housing supply has made landlords add more money into your rent payments, because also at a loss as well. So they have to raise up prices and other factors as well. Maybe they do it because gas prices are rising. Maybe they do it because property taxes are rising. Now, if you're a buyer that's sitting on the sidelines and waiting for the market to cool down, the market, it's slowing signs of cooling down, but I wouldn't buy right now. As you can see, inventory is staying long on the market due to less and less buyers on the market. And this gives enough time for builders and construction workers to build, builders, same thing, to make more homes while you guys are just looking on the inside out. And this will cause home prices to go down, because think of it like this. Real estate investors, they own a good amount of homes. They own, let's say, roughly 20% of the homes in America. That's equivalent to 28 million homes. And some of these investors are going to have to sell because these houses are going to go down in value, because more houses are going to hit the market, and they're going to want to get the bang for their buck before the houses just get dumped on their equity, if you know what I'm saying. Now, if we look at this, it says inventory is up 10.5% since April 2022, but it's still below 2019 levels. What the typical home in the United States is worth, around $350,000. The annual home value growth slowed slightly from 20.9% in April 2022. So it's gradually going down, but I think it's going to take quite a bit more for it to go down. The top three fastest growing markets year over year. I think now lately I've been seeing a lot of Florida in it, and I can only come to the conclusion that like Florida is just like it's highly contested for investors. It's like if they love investing into Florida more than anything, and a lot of people love moving to Florida because it's Florida. They love the weather and it's just a good vibe. The typical monthly rent in the United States it's risen up there. It's 2,000, which it has risen pretty high. And the monthly rent is up 15.9% since May 2021. The pace of annual rent growth slowed for the third consecutive month. And the top three fastest growing markets year over year is all Florida cities.